You mentioned Navan, which is going public right now. It's currently in a little bit of a limbo with the government because the government shut down and such. But what can you tell us about the company's, road to IPO?
Yeah, I can't really say anything. I mean, usually IPOs have quiet periods. I think in
I was hoping that
general,
didn't apply when the government was shut
no.
down, but apparently not.
In general, my understanding of what's happening at a meta situation is just because of the government shutdown, the SEC for a short period was not reviewing or fully reviewing S1s. And then they actually issued a rule that would allow companies to still go public if they did certain filings and certain disclosures, and
Mhm.
then within a certain time period, they could go out. And so I think in general, my sense is that overall companies that have been considering going public are now sort of opted to do that sort of route.
Okay. I was asking because there's a great note in their S1. Jason, you'll love this. They were talking about how they're using their AI powered virtual agent chatbot. And they say that our ability to control customer support costs over time, even as volume has gone up, has contributed to an increase in gross margin from 60% in fiscal 24 to 68 in fiscal 25 and even more. So essentially, they're automating things, Jason, static team size, cost savings, and it's helping the company look more profitable. So kind of an AI story and a fintech story, Elad.
The age of efficiency is upon us. Every unit in every company, particularly in startups who are always resource constrained, they are the ones to first use these tools because they're resource constrained. If they can they can turn a nickel into a dollar, a startup's going to do it. Now, big companies like, well, we're spending $3 to get a dollar in value, and we can afford to do it because we're sitting on a bunch of cash. There's no imperative. There's no existential dread about money at Apple when you're sitting on hundreds of billions of dollars in cash. So yeah, we'll get to it when we get to it. But at a startup, it's quite the opposite. You're seeing that as well, I assume, Elad, is startups doing really fascinating stuff with this technology already.
Yeah, it's super exciting. And the ramp on revenue for some of these companies is out of this world, right? I mean, between going from zero to a few $100 million in revenue in 2, 3 years is something that I haven't seen in a very long time. And there's multiple companies doing that. So I think this is the big sea change, and you see it in enterprise adoption, you see it in all sorts of things. The company that I started with Jared and Eric and others that we mentioned earlier is basically working on this for big enterprise. How can you help big enterprises really
Hmm.
make that adoption of AI, and what applications should you provide for them to be able to really thrive in this post-AI world? So I think there's an enormous amount of stuff to be done there.
Yeah, and it's going to be really interesting. The cynical take on this is a lot of people sampling AI solutions and trialing them, and there'll be big churn issues and, of course, competition issues. And I guess the optimist view of it, which I'm primarily in that camp, is these things are providing massive value at very low price. Therefore, why wouldn't you try it? It's like,
Mhm.
come get 3 hamburgers that are grass-fed beef for $20. It's like, how is that possible? Okay, I don't need to know. I'm just going to order the burgers. Like, if you want to charge me $20 for something that saves me $2,000 a month, okay.
Mhm.
And it's just wild to see how mispriced some of these products are for the value they're creating.
Mhm. Yeah, 100%. And some of them are burning a lot of money along the way to get there. So to your point, the pricing versus the value differential in one or two well-known cases are also just leading to odd economics. But I think most of them are very solid in terms of what they're providing,
Mm.
the potential cash flows to support the business, et cetera.
Probably the best part of being a founder is watching a project that started as just an idea blossom into a full-fledged startup. The worst part? It's bookkeeping. It's boring. It's detail oriented. And it takes time away from building your product and, hey, growing your team. It's time for you to let Pilot take care of all this bookkeeping so you can get back to running your company. Pilot's the largest accounting firm, and it was built just for startups. They understand the technology industry and the landscape. They know the stakes, and they're already trusted by amazing companies we love, like OpenAI, Scale, Airtable, and beyond. And you know what? Pilot is about so much more than just getting your taxes done on time. Pilot has a smart dashboard that puts all the essential metrics your startup is tracking at your fingertip. And they have helpful advisors who can walk you through crucial financial decisions you're going to need to make in the coming years. Plus, when it's time to raise your next round, Pilot COO and CFO services are there to help. So it's time to focus on your company and let Pilot handle the books. And Twist listeners get $1,200 off their first year. Just go to pilot.com/twist to get started.